Welcome back, folks. Today, we are diving deep into the fascinating world of finance to uncover the secrets of one of the biggest players in the investment banking realm, Goldman Sachs. Prepare yourself for an eye-opening journey as we unravel some key financial metrics that shed light on the performance and potential of this financial giant. First up, let's talk about price-to-earnings ratio. Currently, Goldman Sachs has a PRTTM of 15.07 and a PRFWD of 9.60. But what do these numbers mean? Well, PRTTM is a measure of how much investors are willing to pay for each dollar of earnings generated over the past 12 months. On the other hand, PRFWD looks at the projected earnings for the next 12 months. A lower PR indicates that the stock might be undervalued. Interesting, right? Next, we have the PG ratio, which is 1.44 for Goldman Sachs. The PG ratio helps investors assess a company's valuation relative to its growth prospects. A value close to 1 suggests a fairly valued stock concerning its growth potential. So, it seems Goldman Sachs is striking a good balance here. Return on equity and return on assets are crucial indicators of a company's profitability and efficiency. Goldman Sachs boasts an ROE of 10% and an ROA of 0.7%. These numbers reveal that the company is effectively utilizing its assets and generating profit for its shareholders. Earnings per share is a key metric for evaluating a company's profitability on a per-share basis. Goldman Sachs has an impressive EPS of 23.44. Moreover, their projected EPS growth over the next 5 years stands at a promising 10.45%. This indicates potential growth in shareholder earnings down the road. For all the income investors out there, pay attention to this. Goldman Sachs offers a dividend yield of 3.11%, making it an attractive choice for those seeking regular income from their investments. Not just that, over the last 10 years, their dividends have grown at an astounding compound annual growth rate of 17.7%. This has caused the annual amount of dividends received by shareholders to be multiplied by 4 since 2013, going from $2.05 to $9. Incredible! Operating margin and profit margin reflect a company's efficiency in managing its operating expenses and generating profits. Goldman Sachs demonstrates an operating margin of 9.8% and a profit margin of 7.6%. This shows that the company is running its operations effectively and turning its revenue into profit. Goldman Sachs has shown an impressive track record in the last 5 years, with consistent profit and income growth. However, it's important to note that last year wasn't entirely positive. Nonetheless, considering their historical performance, it might be just a minor bump in the road. Investors are often interested in a stock's recent performance. Over the last 52 weeks, Goldman Sachs has delivered an average price return of 7.33%, which is quite attractive for those looking to ride the market's ups and downs. With a staggering market cap of $101.24 billion, Goldman Sachs is truly a financial behemoth. Analysts predict, on average, that the price of Goldman Sachs in the next 12 months will be $385.45, which represents an upsize of 9.12% compared to the current price of $353.23. But for me, and after analyzing Goldman Sachs in depth, I think that a fairly intrinsic value would be around $366, a value that is also above the current price. Impressive, right? And there you have it, folks. Goldman Sachs has shown us some impressive numbers across the board, highlighting its financial prowess and potential for growth. Of course, remember that investing involves risks, and it's always essential to conduct thorough research before making any financial decisions. If you enjoyed this video and found it insightful, give it a thumbs up and subscribe to our channel for more exciting financial insights and market updates. Until next time, happy investing!